What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. So today we're going to be doing an options recap, looking at some Fibonacci setups for trading options, and looking at our picks for tomorrow also. All right. So let's get started. Let's go over here to the Twitter and let's bring some more of our friends over here with our retweet. All right. So here we go. So we're going to say live now. Please come for warm donuts. There we go. So there is a little trick we're going to do to entice some more followers to come here. We're going to be offering warm donuts. All right. And as always, as we get started here, guys, please let me know where you are tuning in from tonight. And then I will throw your names up there. And then we will get right into the material today. All right. So here we go. So we have Tim from, I don't even know how to pronounce that. Ko. I apologize. I'm not really too good with the pronunciation there. Christian from San Diego. There's some more hearts there. Oh, with the pronunciation. Wait, I can hear myself. Okay, that means we have audio. Good. Raju from London. Robbie from Florida. Tim from Rochester. Karen from Australia. Samir from Dallas. Rudy from New York City. Excellent. And then let's do one more. Mike from Hialeah. Perfect. All right. So there we go. Thanks for joining again. And today I want to focus on the picks from yesterday. I want to talk a little bit more about Fibonacci and really how to incorporate it with the options. As you guys know, I'm really well known for Fibonacci trading. That's, my bread and butter. It's a little bit more complex and a lot of people have questions about it. So let's take today's stream to focus on the Fibs. Okay. But we'll also be going through the other setups. So I'm going to start off with Twitter, and we're going to go to the daily chart on Twitter, and we are going to hit the bar replay. So on Twitter here, what you can see is that we had this inside bar close on Friday, right? So we had this inside bar close on Friday, and you can also see something very important here with Twitter. You could see that we actually had 3 wicks right in this zone. 1, 2, 3. So there was a lot of shorts that were hoping for Twitter to go lower. And you'll see at the open how they actually got squeezed, right? So what do you guys think is happening on this inside bar with the option premiums? So when we have that inside bar, we're basically consolidating for one full day, and we're chopping around back and forth within this range. So what do you guys think? What do you guys think is happening to the option premiums when we are consolidating? So are option premiums increasing or decaying? Decay. Good. All right. I see all the decays coming in. Great. So now we're going to go to 5-minute chart and we're going to discuss this. So if we visually just zoom out here, we can see a lot of short pressure here on the 5-minute. We had shorts here, shorts here, shorts here, shorts here, here. So definitely there's a lot of shorts in this trade. So the first candle of the day is a very clean breakup. So you could see all of these shorts back in these previous candles are definitely getting stop run. So that's why I had my trigger right there at 63.15. So right off the bat, guys, we triggered so this trigger was 63.15. We put a low in at 63.06 and we just popped. So right off the bat, that's a free winner right there. Good, solid, at least 25 to 50% return on this bad boy right there if you got in right on the trigger. And very, very beautiful, very clean. So now what happens next? Well, if we keep going, we have another leg higher, right? And then we start to pull back. And the pulling back part is very important because this is what the Fibonacci is basically based on. The Fibonacci is based on the pullback. That's what it's used for. It's used in order to measure the move and to figure out where the next area of support will be on the pullback, or if you're doing it from a short perspective, what area will the resistance be on the short? Okay, so what we're going to do here, guys, is this is a concept I talk about in my book called the morning leg. So what is the morning leg? Well, the morning leg is usually it's within the first hour of the day most of the time, right? And then what you're going to do there is you're going to take the Fibonacci from the low to the high, and you're going to just put it across like this, and you're going to use these Fibonacci levels as we come down to be areas of support. And you can actually see very clearly, guys, right here, you can see the 618 Fibonacci fill right there. So you could see the algorithm sitting on the 618 right there, and it just buys. So you could see when it was here, the candle popped up a little bit, bam. So that's a little, right there, that's a little cue that, hey, there's somebody buying right there. So let's see what happens next, right? So again, we touch it again. Look how beautiful this is. It's very, very, very exceptional, actually, guys. Look at this. We touch it again and we hold it, right? So we touch the 618 again and we hold it. And then from here, we have the new leg up, right? So you see that, guys, right? So this is the power of the Fibonacci. So what we did here is we used the Fibonacci to identify the 618 to be an area of potential pullback. We pulled back there, we touched it right here, the bulls bought it, we pushed back up. That's a great winner. So that's how you can get back in, right? Using Fibs, right? So if you miss the first leg, you can actually get back in with the Fibonacci, right? So now let's keep going and let's talk about what happens later. So what happens later is we actually make a new high, and then you can see right here on the 0.169, we had a nice rejection. And this 0.169 is a custom level that I created, and the 0.1, these are custom levels that I created with my Fibs because I find them to work really, really well based on my back testing. So there we go. You could see right here, the algo taking from the 618 to the 0.169, locking in profits from there to there, right? That's great money with calls or shares. And then as we continue, we grind higher, 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 higher. And then this is very important right here. So the 272 is so you can see, right? The algos, the way it's playing is we're loading up on the Fib. And then what we're doing here is we're taking profits on these extensions, right? And then we're trailing or whatever, right? We're continuing to hold some of these plays. And you can actually see right here, this 272 is another major area that I use, right? And then this one actually ended up being the high of the day. And if we just fast forward right there, boom. So you can see it. So the 272 right there was the final rejection, which pulled us back down into the close, into the end of the day. So that's why it's so powerful to have those Fibonacci's on your chart, because you can use it to get in and you can use it to get out. It can help you guide where you need to take your profits. So, that's kind of what I'm really well known for, is the Fibonacci. And I wanted to share a little bit more about it today. We also did have some pretty good inside bars here, little scalps here and there. Reverse Holy Grail right here. That was a nice winner. But definitely very reasonable on Twitter. We had the trigger level break. We had the pullback to the 618, and we had the trade to the extensions. And even at these extensions here, guys, you can use these extensions for reversal trading. All right. So there we go. So I hope that was informative on Twitter there. Hit me with a 1 if you guys hit me with a 1 if you guys understood that and you guys followed that. And then we're going to move on to the next one. So I only see 133 people in here. I guess I'm streaming a little bit too early today. Normally used to seeing 200 plus. So I hope that those of you that are joining, I hope that, it's a little smaller of a group today. And I hope that I'm going to put some time in there to get you some questions and all that. So appreciate you guys for being here. I don't have to do this. I already know what I'm doing. I make my money every single day, but I just hope that somebody in the chat is going to benefit from this. So here we go. Let's move on to AMD. So AMD was very similar in the sense that we had the trigger breakout. And let's hit the market replay and let's discuss again. So with AMD here, we had another inside bar close on Friday, and it was AMD was very important for me today because I really like the setup here because of the fact that there were these two wicks right here. I could see a lot of short pressure, and we actually pulled back to the mid Bollinger Band, which is a secondary level of support a lot of the time. So now going on to the 5-minute right here, we can already identify there's some trap shorts here, definitely. And the option premiums have been hit and decayed. So we're going to the 5-minute chart here. We have the trigger level right here, the purple line. We have that trigger level right there, and we're going to hit play. Boom. So the first candle, we break cleanly through the trigger right there. So we're filled long right there, right off the bat with calls. And then we have a nice push through right there. So beautiful, clean push through, guys. That could pay the bills. That's definitely a good setup there. Very, very nice. And now the same thing starts to happen again. Well, we talked about this already, right? This is the concept we call the morning leg. So now we start to pull back. When we start to pull back, we could take the Fibonacci from the low to the high like this, and we can just have it waiting there for potential areas to buy. So here we come into the 50. We put in a nice, beautiful inside bar, right? So this could be your first attempt right here with this inside bar on the 50. You know, you could, if you want to be safe, you put your stop loss all the way down below the low of the day, right? And then as we come back down into the fibs, you can add a little bit more. So here we come to the 618. We can tag that there. Boom, 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 right? And then from there, guys, look at that. Beautiful. And what really was amazing about this trade, guys, was a 618 lined up with the previous day's high, which is right around our trigger. So this is what we call market confluence. We had the breakout, pulled back to the 618 lined up with the previous day's high, which is now going to become support. So from a technical trading standpoint, it does not get any better than that. And then here, let's just drag this across so we can use again the extensions above us to help us with the targets. So as we pierce through, we come right, you see that right there? You see that big rejection when we touch the 10%, guys? This is the power of the Fibonacci. This is what I'm trying to teach you guys. Like, most people won't understand why we have a rejection there, but I can see it clearly because it's a 10% measured move. So any algo loading up down here on the 618, this is a good profit first target for them, right? And then they don't have to take off the whole position, but it's just areas to start scaling out and then moving stop losses. And then you can see here that there's more left in the tank. So there we go. And notice every time we come into these profit targets on these fibs, we reject because they're selling. But sometimes there is so much buying, there's so much shorts trapped, right, that we just continue higher and higher. But your job is to take the profits at the most likely area, right? You can't wish for, it to go straight vertically. A professional trader is taking the profits at these levels every time. Every time we tag those levels, you're taking off a bit, moving the stop loss up. That's how you do it. That's how you trade like a professional. So I hope you guys understand that. All right. And then I just want to show you guys another concept that I call the opposing leg. So now the opposing leg can also be used to help us identify high levels of areas of reversals, right? So like we saw right here, we had the 618, which was right here for the bulls. But what if we draw the opposing leg? So the opposing leg is a short. So the short, if we go from high to low for the short like this, you can actually see from high to low right there that we had this beautiful 50% rejection. So there's the 50. And notice how this 50, the completion of this leg, so this push down, pull back, and the completion right there is the 272. That 272 is the completion for any short algo shorting on the 50. And then when we stack the bull Fibonacci on top of that, we have this area of high probability confluence, which is the 618 bull plus the 272 bear target. All right. So I hope that doesn't confuse anybody. I know it's a little bit advanced, but I want to start talking about a little bit more of these, more intense concepts here, because it's going to really help level up your trading. All right. So hit me with a 5 if your mind is blown off of that right there. Hit me with a 5. And yeah, we definitely had some inside bars like up here that worked for nice shorts, pushing us back down. We had this one was a failure, and then we had some nice ones going into later in the day that kept pushing up. But I really want to focus on the fibs today. I really want to, because I think it's going to add you a lot of value to you guys. All right. And I'm just going to plug my book. I'm going to plug my book because I know it's worth it, and I deserve it. And I put in a lot of time and effort into it. So I'm going to say this right now. This right here, the micro intraday fibs, this section of the book covers what I'm talking about there. Morning leg, afternoon leg, and opposing leg. Very, very important. All right. So there's a table of contents. Here's some samples. Here are the Fibonacci levels that you can use for free. And then here is all of the charts. So like, just remember, guys, in this book, I have like 50 charts for you guys. It's very visual. It's 69 pages. I put a lot of effort into it. And if you get the book, you get 1 month for free in the private swing trading room. And I honestly don't think you can beat that. I really don't think so. All right. So like, these are things that are happening every single day in the market, and I'm trying my best to teach you guys every single day. All right. And then before we go into the other two picks, we're going to take a detour to Netflix, and we're going to talk about my big winner on Netflix. And it's also very much tied to the Fibonacci. So I really want to spend some time looking at Netflix with you guys and just talking to you how I was able to make a good profit on Netflix. So Netflix, right, is so this was the exact setup on Netflix right here. So let me just move this over. So you see this inside bar here, guys. This one right here was the Holy Grail, right? And I told a lot of you guys that the Holy Grail is a very powerful pattern. It's a very, very powerful pattern because it identifies two important candlesticks, an outside bar and an inside bar. The outside bar traps the bears and the bulls, and the inside bar pauses and consolidates, getting ready for a move. Okay. Again, nothing's 100% accurate, but I find the Holy Grail to be very powerful. And all you have to do, guys, is do some back testing on your own. Like, I'm literally giving this in your hands for free. Okay. So like I said, so we had the Holy Grail with Netflix, and what I did right here, the entry was 522.50. So I bought both shares and options, and you see my stop loss was right here with the shares. And what happened is that wick touched my stop loss, almost like the market maker knew my stop loss was there, and I lost on the shares. But with the options, I put in my full risk. So what that means is whatever I put in the options, I was willing to lose, right? So let me open up my broker here and on my phone, and let me just talk you through this trade. Okay. So here we go. Let's find Netflix. So I actually traded 3 separate contracts on Netflix. I took the August 20th calls, the August 27th calls, and I actually got into the October 15th calls today. So I'm going to focus on the August 27th 5:30 calls for now. Okay. The ones from last week, I already closed them. I made about triple. This one was, it's probably my best option pick of the year in terms of percentage return. So let's talk about this setup, right? So we know we had the Holy Grail, but what about this? What about the Fib? Well, if I take the Fibonacci right here on this leg from low to high, boom. Now look at this. This Holy Grail was sitting on the 618. Did we not just see something very similar on AMD on the 5-minute? It's almost identical besides the Holy Grail part, but you could see on the 618, we had a lot of wicks, right? So I could see buyers here, and all I'm doing is I'm saying I have an edge here to take a trade. I don't know if it's going to work, but I could see the algos coming in on the 618. I could see the Holy Grail. I have 2 solid check marks on my box, and because of that, I'm very comfortable with taking the trade. So I entered Netflix 522.50. So I put in a conditional order that said, when we break 522.50, buy me the 5:30 August 27, 2021 calls at the market price, right? So I bought 2 contracts at $5.12 each. So basically that's $512 each. So I spent $1,024. So $1,024 on this right now. So those contracts that I bought for $5.12 went to a high of $25.67 today. So I basically 5 times my money, right? So I put in 1,000, walking away with about $5,000, right? So that's like what I'm trying to show you here is the Fibonacci is actually happening on all time frames. It's fractal in nature, right? It's happening on the 5-minute, it's happening on the weekly, it's happening on the daily. And as long as you can get good with identifying them and using them to the system and the strategies that you're comfortable with, you can get an edge from using it, right? So hit me with a 2 if you guys followed me there with the Netflix swing trade and understood it, and if it makes sense. So what I'm looking for with Netflix is so August 20th calls last week, I already locked in for money. I have a lot of open money on this trade. And what I'm going to do right now is just start trailing stop losses, because I still think there's potential here because we did not break the previous swing high yet. So I'm hoping that we can actually break this previous swing high. And if I'm lucky enough, we can actually throw the roof off here. And if we throw the roof off here, I'll probably do it 10 times my money. So I'll probably make, 10 grand. If we can blow through here and if we can blow through the roof. It's potentially there. It's going to be a little bit of difficult of a fight, but Netflix has been going consolidating for a very long time, and I'm in a position to trail my stop loss, and let's see what happens. Okay? That's the way I like to trade. I like to trail. I like to scale out when I can. And like I said, I had 3 levels of expiry: August 20th, August 27th, and then recently today I got into September. What was it? Let me find it. October 15th. So that's it, guys. So that's Netflix there. Hit me with a 1 quickly if you follow me. And just to reiterate, the market is a living, breathing thing because it's based on the psychology of traders. It's based on the emotions of traders. It's based on robots. And robots are programmed by humans, right? So it's a living, breathing, powerful thing. And we have tools that we use in order to succeed. How do you do trailing stop loss for options? I thought that's only for shares. I use conditional orders for options. So basically, if I'm using a trailing stop loss, it's going to be based on the stock. So for example, like right here. So my trailing stop loss now will be at the low right here of 544.07. So if Netflix comes back and it breaks down 544.07, then I'm going to get out of everything. But I use it based on the stock, not based on the option. So that's what we call a conditional order. Okay, it might be a little bit advanced, but that's how we do it, right? Conditional order. So just call, if you're not familiar, call your broker and they'll walk you through how to do that. It depends on your broker. Some brokers don't offer that service. All right. So let's proceed on to NEO. Let's go to the daily and then let's bang out these last 2 and let's move on. So I use Interactive Brokers for the question in the chat. They have conditional orders. You can Google it. It's not too difficult, okay? But just be aware that when you put in a conditional order, it's risky in the sense that it can fill you at the market price, and it's not always going to work. So do your due diligence, practice a little bit, trade small first, right? Nothing's 100% accurate. Get confident with what you're doing before you do it, okay? I'm confident with what I do because I trade every single day, every single week. So hit the market replay again. Boom. So we had NEO right there. Nice tight inside bar. Again, if you notice the theme on these daily inside bars, there was a lot of selling. Look at all the selling. So today, when we have momentum and we start pushing up, we're going to squeeze anybody that was trapped in the shorts. And we also had that inside bar consolidation killing option premiums. So let's go ahead. Let me find my trigger. My trigger disappeared on the chart for some reason. I don't know why. Sometimes I put my lines on there and they just disappear magically. But anyways, it was 37.85. So I'm just going to go ahead again and I'm going to draw this line for us. 37.85. So I see a question about the Fibs. Like I said, I'm going to say it again. Once we start pulling back, once we start retracing is when you draw the Fib. There's always going to be a high and a low point on the day. So once you have an established low and established high point, then you're going to draw it. Okay. So if we use this one as an example, let's discuss this one, right? On NEO. So here we go. So I'm going to walk you through it. So let's just walk through it bar by bar. Okay. And let's walk through it slowly. So we had the first bar right there. Here's the triggers up here. So this one did not trigger yet. Then we have basically just going sideways, right? So we're not going to be, when we're going sideways, we don't have any impulsive move in order to draw the legs. We need a directional move, right? So right now we're chopping, and then we start to push. Now we can start drawing the Fib. Now we have you see this vertical move here? Now we can start drawing the Fib. So what we're going to do here is we're going to take the Fibonacci from low to high. So while you're trading, you need to be having your Fib on the chart like this and adjusting it like this, right? So now I have my Fib. So what am I saying? Okay, if we start pulling back in here, I'm going to be looking for these areas to be support right on the 50, the 618. Okay, now we come back down on the 50. So as an example right here, I can start buying on the 50 right there. Okay, we come to the 618, I can start buying there also. So that's if I want to use limit orders. If I want to wait for the candlestick, I can wait for this pattern. You see this doji? When this doji closed, I could have gotten on the doji right there. But right there, guys, that's already money. Do you understand? Okay, let's pause right here for a second. Do you guys understand how I use the Fibonacci there? Hit me with a 1. I saw the range, and when we started pulling back, I used the areas on the Fibonacci to say, this can be my support, this can be my support. And when it comes down into my support, I'm either coming in with limit orders or I'm coming in waiting for the candlestick pattern. And right there, guys, this move from the 618 back up to the 236, that's golden money. It's beautiful money. You might look at this and be like, oh, that's not a big move. Guys, you can make $1 million on that move. You can make 100 million on this move. It all depends on what's your size. How many contracts are you in? How many shares are you in? Et cetera, et cetera. Okay, so let's continue. So there we go. So this is a beautiful 618 bounce right there, right? Beautiful 618 bounce, pushing, right? So what you got to be doing is scaling out, right? Scale out where you can. At some point, you got to get your stop loss to break even, right? So that all depends on the trader. Okay, that all depends on you, what you're comfortable with, what your risk is. And then you see again, we tag the 618 again. So these areas can be support throughout the day. Look, we tag it again and we bounce again, right? So that's the whole point of it. That's the whole power behind it, right? And you just have to, like, in my book, I talk about different ways, like different variations of how you can use it. Like you can use a limit in approach. You can use a candlestick approach. There's many different ways. But the whole point of it is trying to find support before we even get there, right? So there we go. So like a very picture perfect, right? We've actually today, like the theme of today was a 618 for all of these algos. Boom, 618, 618 again. Look at this. 1 time, 2 time, gone. Very beautiful. All right, so we're gonna move on to Pfizer, and then we are gonna wrap it up. So let's go to the daily on Pfizer again. So same thing, guys. We had an inside bar and we had a lot of wicks, so we had a lot of trap shorts. So Pfizer was actually one that didn't really. It actually was pretty decent, but the follow through disappeared. So let's go back to the trigger. So the trigger was 49.97. So we're just gonna write that in here. 49. What did I say? 49.67. Sorry. So the trigger right at the open, we opened above it, and you can see we retested it. Right? So we opened and we retested it. We retested it, and then once we touched it, we used it as support, and we had a huge pop. So that is actually a very clean play. There wasn't sustained momentum, but that's okay, because as a day trader, we get a pop from here to here, we're going to make 100% return. Right? So that was very beautiful. And then as a bonus to make it even more perfect, we had a nice inside bar right there. So that inside bar came in, and it was on the level itself. A very great opportunity to take a trade. Let me hop into the Discord and make sure that it was there. So all members in the Discord for these picks, they get the alerts for when we get those options, when we get the inside bar setups. So let me just make sure. So Pfizer came in. Wait, I gotta go down. Today, Pfizer right there, inside bar. So there's the Pfizer call out. Boom. Right? That's a beautiful winner, guys. That's a huge winner. That's maybe 3 or 4 times your money. So in this case, guys, you see right here, if we draw the fib from the low to the high, we can actually see in this case, the 618, it tried, right? So not all the time. So this is a great example. This is to show you when it doesn't work, right? So you can see here, it tried, it held it, pushed, and then boom. So it didn't have enough algo pressure. It didn't have enough buyers to really push it, but you could see, right, that it tried. So that's the thing. So when it's not going to work right there, you got to cut your losses. So depending on where your stop loss is, you got to cut your losses. But there's still, even if you're like a scalper, this move from here to here, you can scalp it, right? Like if you're going down to the 1 minute chart and you're scalping, you can make good money using the levels, and then you can tag it on a lower time frame and pop it up, right? So one thing that I did see though was the opposing leg worked really well on Pfizer. So the opposing leg, we can come here from high to low like this, And then you can see right here, let me drag it across. So you could see it right here. So we had this push down, pull back into the 382, trade to the 272 right there. Then we came back and tagged it again. So then what we can do here now is we can draw the sequence leg. So let's draw the sequence leg from this high back down to this low right here. Another 618, another trade to the 618. So look at this one. Pull back to the 618, trade to the 618 extension. Very beautiful. And that was the low of the day. So those opposing leg Fibonacci's are a little bit more advanced, but you will see them all. The more you get comfortable with trading the fibs, you will see them all. It's just a matter of practice. You just gotta practice. So there's infinite ways to use a Fibonacci. Infinite. The whole point of it is really the reason why the Fibonacci's work well with options is because the Fibonacci is getting you in the pullback. So naturally, when you're buying on a pullback, so like let's say you're buying when it's coming down, calls are going to be cheaper than buying when it's going up. If you're shorting when it's pulling back up, then the puts are going to be cheaper than if you're shorting on the way down. So that's why the Fibonacci is so powerful, because it's actually, that's why the book is called the Golden Partnership. It's a golden partnership because the Fibonacci has a synergy with options. The synergy is this: when the options are going in the other direction, right? It is actually, the premium is going to be cheaper, right? So that's the golden partnership. That's why I call it the Golden Partnership. All right, guys. So there we go. So picks for tomorrow: Microsoft, Upstart, X, Chewy. And that's it. Ready to rock and roll. So we hit this at about 30 minutes in there. I would appreciate, guys, if you hit me with a like. I'm really trying to grow this YouTube. I want to keep just giving as much information as I can for free, and really keep educating people, and just be honest and be fair with everyone. Anything that I offer you guys, I think is fair. And I know what other people charge, and I know what other people scam other people. And I'm trying to be as fair as I can be and be honest with you guys. That's what it's all about. All right. So there we go. So very clean. I love it. I love the fibs. You know, when I look at a chart, I can tell you about, I could literally talk on a chart for maybe 1 hour per each chart. But the whole point is just to open your mind in order for you to find what works for you. Because for some people, it's going to be the inside bars. For some people, it's going to be the outside bars. For some people, it's going to be the Fibonacci. For some people, it's going to be the trigger. It doesn't matter. What I'm trying to do is give you the tools you need to succeed. You have to make it happen. Nobody is going to pull the trigger for you. Okay? Nobody's going to do that. So the point is, get educated, take control of your finances, take control of your dreams, and get it done. All right, boom. So Trutron right here, my brother. We gotta. This guy is he's just amazing. He's always donating. So let me look at that super sticker. Boom. We got the Cup of Joe. Thank you very much, sir. We got my brother here, Craig, as well. Craig, man, I thank you so much for the back testing the other day, man. I appreciate that. You're the man. Oh no, Chutron was Keep It Up. And my brother right here, Chris Cox. This is the Cup of Joe right here, $3.99. All right. So there we go, guys. There it is. I wish I could spend some more time with you guys, but I need to get some rest and re-energize myself for the, every day is a battle. That's why it's called Trading Wars. Every day is a battle. I'm trading out here. I'm trying to grow my capital the same way you guys are. And let's go out there and let's get it done. All right. Have a good night.